It is really easy to forget that the moment you make your first dollar as a self-employed creative, the government expects a cut. And it's often a bigger cut than you might think. I, in fact, did forget this, and I had a really rough wake-up call when I ended up owing the IRS $10,000 that I did not have. That led me down a massive rabbit hole searching for the best tax strategies for creatives. So in this video, I want to teach you everything that I have learned about this topic over the past 6 years. So if you have ever wondered whether you should be a sole prop or an LLC or what those terms even really mean, this video is for you. And thank you to Doula for sponsoring this video. So if you're making money from your creative work, you're selling products, taking brand deals, teaching a course, whatever it is, and you haven't chosen a formal business entity, I have some news for you. You actually already have. So in the US, you are considered a sole proprietor by default. The government considers you a business the moment you take a dollar and, start gaining revenue, okay? No paperwork, no filing forms, no whatever, no fancy nothing. You just are that. It just is what it is, okay? And that's awesome. Having that be the default, having lowered the barrier so much to starting a business is massive. It's one of the things that I love about this country. But with that default state comes some very serious drawbacks. Sole proprietorships are the riskiest entity to be for liability in your own personal assets and the least tax advantageous. So while it's great that you are a sole prop right now and that you have to do nothing to be that, it's also not what you want to probably stay as long term, and I will explain why. So as a sole prop, there is zero legal separation between you and your business, right? If something goes sideways legally and you are held liable for something, or you have to declare bankruptcy, or someone sues you for whatever reason, everything is on the table. That means your house, your car, your investments, your 401k, your retirement, all of that is a part of you, and so it's part of the business because you are the business. Does that make sense? So bankruptcy court or a lawsuit could claw all of that into legal proceedings. This rarely happens to folks, but when it does, it's really devastating. And so I kind of want to flag it now because some folks operate businesses that are a little bit more risky in terms of liability, and that's a really important thing to consider as a drawback of a sole prop, okay? More immediately though, I think the tax situation for sole props is kind of rough. So when you work a regular job, your employer pulls taxes out of your paycheck automatically, right? Like you see that money on your pay stub, but it doesn't hit your account, so you don't have to have it set aside, for example. When you are the business and also the employee, when it's just you, you have to set that money aside, and you also have to pay more, right? Because with things like Medicare and Social Security, your employer pays part of that on your behalf, right? For you. They pay those benefits out. When you're your own employer, you have that extra tax liability, right? So you can no longer be no thoughts, head empty when it comes to taxes. You are not allowed to, basically. You don't have that privilege anymore. So this is a far greater tax obligation that sole props have, and when you combine that with state and federal income, you should realistically set aside something like 25 to 30%, if not more, of what you make. And that's a lot. That's a lot. That's why I talk so much about being ambitious and pushing for more and making more money, because when you consider that 30% of everything that you make will immediately go to taxes when you're a sole proprietor, suddenly you have to dream bigger, because we're not even factoring in expenses yet, and we're already a third of our money is gone. That's crazy. I love paying taxes. I love it when people know how to read. I love when roads work. I love public transit. I'm happy to pay taxes, but I also think that you should be very vigilant of this in your business and plan for it in advance. So forming an LLC is the first real step towards running a more established business, right? When you form an LLC, you get what's called an EIN. I forget what the full thing is called, but it's basically like a social security number just for your business. That gives you the opportunity to do things like have a business bank account, to have business loans, and to have that really, really nice legal separation between you and your business. Filing fees for this really vary state by state. And there's a good bit of paperwork that you'll have to do when you start doing this, not just as a one-off thing, but kind of recurring. And you also have to pay some money to actually file the paperwork to become an LLC, to have this established. That might cost you something like $500-ish, if not much less than that, depending on where you are in the world or in the US. There are also sometimes kind of like ongoing fees that happen, but generally $500 a year is like a pretty good kind of thing to budget. Often it'll be much less than that. Here in California, I think I pay like the $800 a year franchise tax, but that's just me. So that said, while we have now covered the kind of liability aspect, we have not yet fixed the tax situation. So if you do nothing after you form an LLC, you will not have changed anything about your taxes, okay? You're still going to be taxed just like you were when you were a sole prop. Nothing about that will really change, as far as I'm aware. I'm not an expert. So now that we have done that, now that we have our LLC, we have two options. And to be frank, I think there's one obvious choice here. I will just tell you which one I think it is, but I also want to, do my due diligence here and tell you both options just so you know. So option number one is called a C-Corp. You have probably heard this term, okay? It's like what every big company and startup is. It is best for a situation in which you want to be able to give out equity, or you want shares and shareholders, and you want to take money from investors, and there are like a bunch of people that all want a part of your business, and you want to be able to like distribute kind of equity and profits in a certain way that's very specific, right? I think this form, this C-Corp tax election, is basically irrelevant for like 99.99% of you, okay? It's probably not the one that you should go with unless, like I mentioned, you're a startup or you want to, have equity be in play here for some reason. I think probably that's not most of you, right? Okay, the one that I think that you should actually go with, the tax election that I think is best for creatives, is an S-Corp, and I'll explain why. So an S-Corp is actually what I use for my own business, and I think it is the best option by far for creatives. So when you elect S-Corp status, you are splitting your income into two buckets, okay? Bucket number one is your salary that you pay yourself from your business, okay? Bucket number two is what's called owner's distribution. This is basically like the business sharing its profits with you, the owner, okay? Your salary, your take-home pay, your paycheck is taxed at that full 30% rate that you would normally be taking as a sole prop, okay? That's still consistent. We're still doing that. We still have to pay Social Security and Medicare and Medicaid and all of that stuff, okay? Like, we're still doing that. But your owner's distribution is not taxed at that rate. It's taxed at a much lower rate. So I'll show you how this shakes out here, because as scary as math can be, I do think that it just shows more clear than anything else how this actually works. So let's say that you make $10,000 in profit every month. You're rolling in it. Good for you, right? I know it's a big number, but like big round numbers like this make the math really easy. So with an S-Corp, you will pay yourself a salary, okay? Like $3,000 a month or something. That goes through payroll and gets taxed at that full 30% rate, okay? So in effect, our take-home pay is $2,000 a month because 30% of it is gone now. Goodbye. That still leaves $7,000 of money that we could take out in the bank, okay? Let's say that we take out all of that as owner's distribution, this fancy new thing that we're learning about. For that, we are only paying income tax, which might be something like $1,050. It's much less, okay? That makes our total tax bill just under $2,000, like $1,950. We're taking home, in effect, a little over $8,000. That's awesome. If we had done that as a sole prop, we'd be paying 30% flat for the entire $10,000. So $3,000 going down the drain in taxes, an extra $1,000 a month for literally no reason. Hello? Like, do you see the insane savings here? It's actually kind of crazy. But with those advantages comes some operational complexity. Running an S-Corp is just a little bit more work than just an LLC or a sole prop. There's stuff that you gotta file, there's paperwork that you gotta fill out, there's things to do and manage and track, and that's why I think the sponsor of this video, Doula, is genuinely so helpful. Doula is a business in a box for founders. They handle LLC formation, you get an EIN, they help you open a bank account for your business, and manage the ongoing compliance paperwork that comes with running a legit business entity, because forming an LLC is kind of just step one, right? There are reports that you have to file every quarter and every year, there are taxes you gotta file, and if you don't do this, if you don't stay compliant, if you aren't on top of things, the IRS can fine you like a lot. Up to $25,000 for missing paperwork deadlines. It's kind of crazy. And as someone that has already received a surprise bill from the IRS, I kind of don't take those fees lightly. They are a big deal. And their premium plan includes a real human bookkeeper, an actual real life person you can talk to, and rest assured that they are looking over all of their work and all of your business paperwork. It's amazing to have that peace of mind. I would not discount that. Doula has a free demo if you just kind of want to talk through things before committing, and they have a risk-free money-back guarantee, and you can get 10% off with my link and code in the description. Okay, so once you are starting to make something like $60,000-ish a year in revenue with your business, I think that you should ditch the sole prop, file an LLC, and become an S-Corp. In that order, okay? As someone that has like gone through this and done a lot of research, I want to walk you through some like extra areas that you can save money if you are at that stage, because learning this was crazy and it was so cool, and I feel like a real adult now that I know this, so I want to share it with you. Okay, so when you run payroll through an S-Corp, you can open a solo 401k, a retirement account, as the business owner, okay? So like, you as the person that owns the business can open up a 401k for your employee, which is you, and legally, you can contribute up to 90% of your paycheck to that retirement account, okay? And any money that goes in there is tax deferred, meaning you pay zero taxes now and just when you take it out, like much later in life, okay? So that $3,000 salary is what goes through payroll, right? And with this new fancy 401k setup, we can put up to 90% of that into that 401k, okay? So that would be like, I don't know, $2,700 or something. That leaves us with just $300 as our kind of taxable income. So our tax bill is now only $100, 30% of, or I guess, I don't know, it's like 90 years, whatever, right? It's like 90 to $100-ish is kind of what we're working with. That's crazy. That reduces our tax obligation again by a lot. So if we add that 90 to the 1050 in income tax that we're taking on the owner's distribution, that's $7K, our total tax bill drops to around $1,140, a little over $1,000 on that $10,000 month, instead of almost $2,000. So we have reduced our tax bill by a little over $800 with just that one thing. And we have saved for retirement also in the process. So what you're basically doing here is your salary is the money that you are putting towards your investments in your retirement, and we're saving that there. In the owner's distribution, that kind of lower tax rate thing that we talked about earlier, that is like your actual take-home pay, basically. And obviously, this should go without saying, but please talk to a CPA or an accountant before following this advice. I am just a person. I'm just sharing my experience. And I do think that someone with credentials and an office and that lives in your area will be way more likely to be able to help you in your specific situation, okay? I am not going to be giving tax advice in the comments. I am not qualified for that. No, thank you. Okie dokie. All right. So I have a few last bits of advice for you. Number one is to really pay attention to where you file your LLC, because where you file your LLC really does actually matter. Okay. Every single state has different rules and fees and levels of privacy. I ended up filing in Wyoming because if I had filed in California, my home address would have become public record. And for obvious reasons, I kind of didn't like that idea. If you really want to keep your personal information private, you can also use what's called a registered agent service. This is basically like a subscription service that you opt in for, where they give you an official address that you can use for filings just like this for only this purpose, okay? You cannot get mail there. It is not a P.O. box, but that's one extra way to get a little bit more privacy if you want that. Number two is to always keep your business and personal finances separate. This is so easy to forget. It is so easy to overlook, but it will make taxes much, much harder. And if you have an LLC and you are found to be not keeping these separate, you will lose the tax separation, like the liability separation that the LLC gives you in the first place. And then your home and your car and all the stuff that you are buying with your business money, that will once again be vulnerable. So don't do that. Just don't do it. It's super simple. Like when you get an EIN, that business social security number that I talked about when you form your LLC, you can open an account that is just for your business. And number three is to file taxes quarterly. I did not do this for a while because it was scary and I wanted to avoid it and I didn't want to deal with it, and I regretted that because the IRS really does expect you to file taxes quarterly. If you expect to owe more than $1,000 for any given year, the IRS really wants estimated quarterly payments every quarter. And if you skip them, if it's too aversive and you don't want to touch it, so you are irresponsible, you will owe penalties on top of what you actually have to owe them at the end of the fiscal year, at the end of the tax year, I guess, actually. And you don't want to do that. I do not like surprise bills. You probably don't either. Who does? Who would be a sick freak that would like that? I can't think of a kind of person that would like that. Just file estimated quarterly taxes. Do the hard work. I know that it's scary, but it's so worth it. And if you expect to make a lot of money and you don't, then you get a big return, right? And that's pretty good. So kind of worst case is you pay too much and you get money back. Pretty good. That's a pretty good worst case in my opinion. So you are probably a sole prop right now, and being a sole proprietor is totally fine. It is, again, the default. But it's also not what you probably want to be forever, like I mentioned, and I do think it's really worth it to keep in mind all of the advantages of filing an LLC and being an S-Corp as you continue to scale your business over time, because those savings that I mentioned in this video, like they stack. I don't want to let this intimidate you, but just bear it in mind. And if you want to help with this, Doula, once again, is a great resource, and I will leave more videos on the screen if you want to keep hanging out. Okay,